Hey guys, I've been following this book, The Intelligent Investor by Benjamin Graham, and it's a really interesting read that I think everyone should check out, whether you're investing or not. Today, I want to share what I've learned about the criteria for an enterprise investor, and I'll use Google as an example to show you how to analyze a stock using Yahoo Finance. Let's dive right into the data. First, let's check if Google has had any earnings deficits over the past 5 years. Looking at the income statement, we can see Google's revenue is around $359 billion, and their net income to common is $111 billion. They've been consistently profitable each year, so Google definitely meets the first criteria. Next, let's look at dividends. Historically, Google didn't pay dividends, but they recently started with a forward annual dividend rate of 84 cents and a forward yield of 0.47%. The payout ratio is about 8.9%, which shows they're starting to return some profits to shareholders. It's not a long history, but it's a good sign of maturity. And now let's talk about financial strength. Google has total cash of $95.33 billion and total debt of $28.5 billion, with a debt to equity ratio of just 8.25%. Their current ratio is 1.77, showing they can cover short-term obligations easily. This strong financial position is a big green flag. Next, we look for stable or rising earnings over the past 5 to 10 years. Google's profit margin is 30.86% and their operating margin is 33.92%. They have a quarterly revenue growth of 12% and quarterly earnings growth of 46% year over year. This consistent growth pattern shows stable and rising earnings, exactly what we want to see. Finally, we want to avoid companies that rely heavily on sales hype. Google's business is built on diverse revenue streams like search ads, YouTube, cloud services, and AI, making them stable and not just dependent on trends. Putting it all together, Google meets almost every criterion for an enterprise investor using Benjamin Graham's philosophy. They have strong financials, stable and rising earnings, and are not reliant on hype. So, in conclusion, these are the key criteria you should look at when evaluating a stock. As an enterprise investor, make sure you do your own research and see if the company fits your investment goals. Let me know in the comments which stock you'd like me to analyze next, and don't forget to like and subscribe. See you next time.